Stocks around the world have quickly made up lost ground. In Hong Kong, the Hang Seng flirted with 20,000, its pre-Lehman collapse level, while here at home, the Dow yesterday closing above 9,000 for the first time since January. So how does this all affect the global currency market? Well, let's get insight from David Wu. He is global head of foreign exchange strategy at Barclays Capital. That's the third biggest currency trader in the FX market. Thank you so much for joining us, David. The gains that we've seen in equities are a reflection of the risk rally or reflation trade. How far along are we in this cycle? Are we at the beginning, the middle?
I think we're somewhere probably in the middle, but I think, to the extent that a lot of investors are still sitting on a lot of cash on the sideline, I think what you're seeing is basically people essentially being forced to essentially put money to work, and I think what you're seeing essentially is a rising tide lift all boats.
Okay, I know that you were looking at emerging market currencies. They certainly are in favor at this point. At what point do they start becoming overvalued in spite of the pickup in risk appetite?
I think, right now, I guess, most people are not that worried about valuation right now because, as I said before, people are sitting on a lot of cash, and they have been underperforming against their benchmarks if you're real money investors. So I think a lot of people are still having to essentially chase this rally. So I suspect if the equity market continues to go higher, I think you're going to see, actually, in fact, if anything, overshooting of some of these risky currencies, especially in emerging market context.
Hey, let me ask you, David, we just talked to Ericsson CEO Karl-Henrik Svanberg. He says that there are currency problems in Latin America, Bangladesh, Pakistan, Eastern Europe. All of their currencies are too weak to buy his products. What do you say to him? How long will it be before they can?
You probably won't have to wait that long because, as you know, especially in Eastern Europe, investors' perception about Eastern Europe has been very pessimistic over the last 6 months. In fact, even though investors have been piling into Asia, or to some extent Brazil, they have been shying away generally from Eastern Europe. But I do think that now that global recovery seems to be taking shape, people are starting to grow more confidence. People figure, well, recovery is going to benefit everybody. So I think you're going to start to see some money, some hot money going into Eastern Europe. So I suspect that Eastern European currencies have a long way to play catch up, at least over the next few weeks.
Speaking of hot money, Japanese investors, of course, looking to move money out of their currency and into higher yielding assets. How low would you say the yen could go versus the dollar and the euro?
I actually think, I know that, today and yesterday there were some Toshin flows, going through the market. There's some like $7 billion of bonds, primarily emerging market currency bonds that were sold to Japanese retail investors. But I'm not convinced that there is a huge demand in Japan for this. And I think, Japanese investors, I think, in fact, if anything, are more likely to stay home than it was the case a year ago or 2 years ago, for that matter. So I think from that point of view, I don't really see the yen essentially starting to weaken again. And I think one of the most striking story, over the last 3 months is the fact that VIX went from 80 to 25, and the yen has actually strengthened against the dollar. And I think the Japanese are very, very concerned about the U.S. fiscal outlook. And I think you're going to find that probably dollar-yen is going to be range-bound for the most part.
Okay, thank you so much for your time. That was David Wu of Barclays Capital in London.